Welcome to Profitable Women, a podcast for the female business owner who wants to build a profitable and sustainable business that aligns with their life. We will talk about the money stories impacting your decisions, financial strategies to grow your profits, and how to embrace your female superpowers. I'm your host, Sheila Hansen, certified public accountant, business mentor, and certified coach. As a mom of three and business owner, I have spent the last 7 years supporting six-figure business owners make confident financial decisions while raising my babies. After making the hard decision to leave my job at a public accounting firm when I had my oldest, I'm now on a mission to empower women to build wealth without sacrificing themselves. If you find yourself avoiding conversations about money, are burnt out from working all the time, wonder where your cash goes, or want to learn how to pay yourself six figures, you're in the right place. Remember, the information in this podcast is general in nature and for educational purposes only. For specific financial advice for your situation, please consult a professional. Now, with that out of the way, let's get to the show. Today's topic is planning for taxes. And I'm going to give you a forewarning. I might get a little spicy today. We are just coming off of tax season. And to be honest and vulnerable and open with you, as I ask you to be with me in finances, there were some conversations this year towards the end of tax season that I had with clients that I don't enjoy having. I don't like it. They don't like it. But yet, there we were. The conversations were around a large tax bill or tax liability due that was a surprise, right? I'm okay with having conversation about large tax bills if we know what's coming up and what's happening. But I don't like the ones where it's a surprise. I know there are people in life who would enjoy adventure and a good surprise, right? Surprise party, whatever it may be. But I'm not sure that there's really anyone that enjoys a surprise when it comes to their tax liability. I guess you could say maybe if you were getting a surprise refund, that might be fun. But when it comes to a balance due, nobody wants that. You also now might be thinking, wait, Sheila, aren't you their CPA, their tax preparer? Isn't this your job to help them anticipate this and prepare them ahead of time? And yes, I'm so glad that you brought that up because that is what I strive for in client relationships. And for everyone to be informed, to know what's going on, to be prepared, and plan for it. And I want to use this scenario with these couple of conversations that I had to have to help educate you as you are creating your financial systems, as you're hiring your team of people to support you so that you can be set up for the best possible outcome and to prepare you for the greatest return possible on your investment when you're hiring a tax preparer or an accountant or CPA. And so here we go. The common theme that came up in these conversations or these situations that contributed to the surprise were both of them were individuals that own businesses, right? That's not new. That's my client base. We work with individuals who are business owners around here. But in both cases, they had at least one or a business that was not up to date on their bookkeeping. Or if they had like their bookkeeping things posted up to date, they weren't reconciled. And so there was missing information within that file, whether it was a date range that didn't pull in from somewhere, whether it was duplicate entries or missing entries. There was something about the bookkeeping that was just not accurate. So the old saying of data out is only as good as data in comes to mind. And in this case, at least one of the cases, we just didn't have the data, right? We didn't have the numbers. It wasn't up to date. So there was no data I could give ahead of time that would allow for the surprise to not happen. And as CPAs or tax preparers, when it comes to planning or strategy, we can only be as good as the information we have regarding the situation. So this is something we see so common. Things will happen throughout the year. If you're only talking to your tax person when it's time to file your taxes and you haven't informed them of what's going on, any simple change that has been made in your scenario, it could have impacted your taxes. They don't get the opportunity to provide that strategy or planning ahead of time, and then they're left giving you the bad news at the end. So, the best way to prepare for an upcoming tax liability is to have up-to-date records that show all of your current year earnings, and then also have conversations with your tax preparer throughout the year so that adjustments can be made. This can be accomplished by doing proper bookkeeping yourself, hiring a bookkeeper, having a CPA that does both your bookkeeping and your taxes. There's all kinds of different scenarios, but the important piece is quality bookkeeping that gives you accurate numbers on a regular basis. So in the case of all my other clients, there were no surprises. We had already done the work, the bookkeeping, and at tax time, it was simply filling out the forms, completing the compliance process, maybe making a payment or scheduling payments, but there was no surprises. There was no scrambling to try and find funds on how we're going to pay it. There was no dealing with penalties or interest for late payments. There was no headache. It was just simply kind of a check the box exercise that we were going through during tax season. So I like to tell stories and give you other scenarios that you can maybe relate to that helps get you to the idea and the concept that I'm talking about. So let's use a completely different industry for an example of what this could look like. So we all know when it comes to the health of our teeth, right? We should brush and floss and do those daily maintenance, if you will. And then we go in regularly for cleanings with the dentist. Standard. I think everyone understands that. It's not rocket science. To help the health of our teeth, we do these daily things. So if we aren't doing those cleaning and brushing and all that on a regular basis, it's probably a lot more likely that come the time when we do go in for our cleaning, it's not just going to be a simple cleaning and then go on our merry way. We're going to have something to deal with like cavities or something more major where we lose a tooth. I don't know. I'm not a dentist, so I don't know the issues you can have with teeth, but I do know that those regular brushing and flossing, those are the advice for a reason. And so, yeah, sure, there is still the chance and likelihood that we're doing those daily things and something comes up. We still get a cavity. We still have other issues. But those other issues are less likely, right? It's all risk and reward. Our bookkeeping is equivalent to the brushing and flossing in accounting and business. If we have a handle on our numbers, if we want to understand our finances and be able to plan ahead for things like taxes and other investments in our business, we have to do the daily maintenance. We've got to do the bookkeeping. And it's when we're doing those daily things that we notice. It's when we're brushing that we notice there's a sore spot or that something doesn't feel right. And we can identify an issue that we can ask the dentist about or that we can have a conversation about before we get to the point where we lose the tooth altogether. We can catch it in the early stages. Same thing with your taxes. Same thing with your finances. When we are doing the bookkeeping, when we are looking at those numbers on a regular basis, we can identify, oh, we're not setting aside. We've now jumped into a different tax bracket. We need to be setting aside more. We need to be making our estimated tax payments. Something came up, we forgot, it slipped our mind. All of those things can be caught by doing the daily activities and maintenance. You might also have thoughts about your bookkeeping like, I can do this. It's not that difficult. I'll figure it out. Things aren't that much different than last year. What do I really need to update? And so on. But you know that you're going to get busy. You know that when it comes to the to-do list that you have, it falls to the bottom. When you look at how you are spending your time and the cost involved with hiring someone with an expertise in bookkeeping or financial statements, it just doesn't make sense for you to be doing it. You can grow out there and grow the business to so much more when you are not spending your time doing this. You might be capable of the brushing and flossing, but also let's have a real conversation on how many of us do those things every day. Sure, there are people that do, and I think there's plenty of us that don't. Hey there, fellow female business owner. Are you tired of sifting through endless articles, resources, and scrolling social media just to find the nuggets of wisdom that actually apply to your journey? Well, I've got something just for you. When you join our weekly email list, you will receive a go-to resource with actionable tips, inspiring stories, and valuable insights tailored specifically for women entrepreneurs like you. Each week, we deliver a dose of empowerment straight to your inbox, covering everything from mastering your money mindset to navigating the ever-changing landscape. Join other like-minded women who are leveling up their business and living their dreams. Sign up for the weekly email today, and let's conquer the business world together. Head on over to the show notes and find the link for you to enter your email address to get started. You'll be the first to hear about upcoming masterclasses and have weekly action items to contribute to your success. Sign up today. When it comes to this episode, I want you to take away this learning point. If you are coming off a tax year that you had a surprise, or if you are scared of being in that situation where you don't expect something that is coming, here are 2 things that are in your control to help prevent that. Number 1, to be up to date with your financials. The method of how you keep your financials really doesn't matter. The important part is that they're accurate. So that's where we could get into which accounting system, what could you do it in a spreadsheet, all of that. Yes, you could. All of it doesn't matter if they're accurate. And there's checks and balances and ways to go about it. Like I mentioned, reconciling is important because it helps us catch what's missing. And someone who has that experience, that understands that, knows that accounting is a puzzle. And when you're looking at the puzzle the right way, it will tell you if there's pieces missing. And then 2, outside of having up-to-date financials, is to be having regular conversations with your tax preparer. Not just during tax time, not just during January through April. It's having those conversations all year long. And I will tell you this, if your current provider is too busy to reply to your emails or answer your calls or proactively reach out to you, I encourage you to find somebody else. I'm not going to sugarcoat that I feel the accounting industry as a whole is lacking when it comes to customer service. We can definitely do a much better job than we are doing. But I also want you to remember that they can't do calculations and inform you of the things that you haven't told them about, or it's only as good as the data that you're giving them. So to be an informed business owner and to become confident in your financial decisions, you need a few things. 1, you need the data, because the truth is sometimes our heads tell us a different story than reality. And that can go both ways. That can be, it tells us a better story than the reality, or it doesn't clue us in on everything and we're going to the worst case scenario in our head when that's not simply the case. So we need that data. And then 2, we have to have the conversations. We have to be informed and we have to understand what it is we're looking at, what it is that goes into the calculation. So if you listen to episode 5, are you avoiding your finances? I've addressed this. You know I understand it. You know I understand why you may be avoiding those conversations. It's complicated. You'd rather do something else with your time. It's not interesting. You get busy, and there is most likely a discomfort that comes up for you. And even though it's uncomfortable, it is so important for us to lean into that discomfort. That is how we become an informed business owner. That is how we make confident financial decisions. So, like Yogi the Bear says, only you can prevent forest fires. In this case, you can prevent a surprise at tax time. And we do that with up-to-date bookkeeping and regular conversations with our tax preparer or financial expert. So, until next time, let's prevent the forest fires. We'll chat next week. Thanks for tuning in to this week's episode of Profitable Women. Make sure you never miss an episode by hitting the follow button in your favorite podcast player. And things are always easier when you talk about them with a friend. so be sure to share this episode with them. If you're looking for more ways to grow your financial confidence, head to the show notes for a link to subscribe to our weekly email. Until next time.